We're starting with a global giant in the house goods environment, and that is Samsung. Now remember, of course, this is a South Korean multinational electronic company headquartered in Suwon in South Korea. It's the flagship subsidiary of the Samsung Group, because remember, the South Koreans have these things called kaibols. So there's a Samsung holding group, which was founded by the Lee family, and then as a variety of different operations, shipbuilding, construction, all manner of things. But the one we're talking about today is Samsung Electronics, which is a major manufacturer of electronic components, as well as the world's largest television producer. It's of course got all of those Samsung Galaxy phones. It's a major competitor in that environment as well. It's a big one, 171.99 billion US dollars. That's if you take the main listing in Korea and convert from Korean won into US dollars. Although you can also buy this stock in London or in New York using the ADR and GDRs that trade on those markets. Hasn't done all that well recently. We'll see a share chart in a minute. Price to earnings ratio 8.97, dividend yield of 3.33. It's quite hard to get those numbers, but I think those are the right ones.
I must say the PE looks a little bit low. The dividend yield looks fine.
Yeah.
But I mean, if you look at their last statement, the quarter-on-quarter profits were actually
in fact,
down.
There is a chart. They're trading at 1,000 Korean won. But you can see that the performance since 2013 has been sideways to down.
Sideways to down. Look, I mean, their last set, the profits were down slightly. Massive investment in capital expenditure and research and development, as we spoke about. But they're moaning. They say, TV demand's not what it used to be. The DRAM, the memory chip demand, is not what it used to be.
So those are different things.
Yeah.
The televisions, of course, we know what the LG TVs are, and they get bigger and bigger
and more expensive
and more expensive
every
year.
Yeah.
But the DRAM that's actually manufacturing components, which is the memory chips for other people's cell phones, other people's computers.
Is massively capital. I mean, it'll cost you $2-3 billion
plants
to build those fabs.
Yeah.
I mean, it is just astonishing.
But you're up against the Taiwanese and the Chinese, Taiwan Semiconductor.
And it's still a lot made in America as well.
Yeah.
In fact, they're one of the big manufacturers. So highly competitive business. But, you know, they say TV demand's quite poor. Computer screen demand's quite poor. The DRAM you spoke about, that's quite poor. It's tough out there, actually.
And what would that be? That's just a question of the cycle of consumer discretionary spending in rich countries.
Yeah. And also, you know, we're still suffering, and I mean, you and I will remember this very, very well. Massive IT expenditure. There's not that much happening anymore globally. A lot of the big systems, the big banking systems, the airline systems, have all been upgraded.
Yeah.
So there is still obviously demand, but there's no sort of surge in demand. So they've become, from a heavy growth industry, they've become more of a consumer GDP tracker type of industry globally.
The phones, of course, are important because the phone is probably the most desired item. I mean, the latest Galaxy 7 phones, I don't have one, I'm an Apple man, but I mean, they seem to have sold well. The price point is less than the Apples. In fact, but if you've seen those charts that show who makes money in the cell phone manufacturing industry, Apple makes 115% of the profits in that industry because everyone else makes losses.
That's a problem.
Yeah.
And I mean, there was a big talk about Samsung actually taking over from Apple a couple of years ago. Apple was losing market share, but they seem to have come back a little bit. But I can guarantee you the cool cell phone in 5 years' time will not be the cell phones we think are cool today. It is so competitive.
So what you're leading to there is a point that consumer electronics itself is a dangerous and difficult area.
It's a very difficult
I know that
area.
apparently at a recent AGM of Samsung, instead of the usual calm event that one expects from Korean companies, there was a big ruckus going on, and some investors arrived there and started shouting about the fact that
what's happened to the share price?
Saying it's not good enough just to be a commodity producer of everyone else's glossy stuff. You've got to get into
ultimately you do become a commodity because you do become a commodity producer because companies, small companies are innovative. Big companies somehow just cannot keep the innovation edge.
Okay, so as far as that's concerned, this one looks like a not hot because what we like is earnings, momentum, excitement, growth. You know, companies that have got mojo.
And certainly their last couple of results were actually not all that good.
A little disappointing. Okay, so not hot on that one.